Before you open Zillow, before you call a realtor, before you even drive through a neighborhood that you love, there is one thing that you need to do first. And most first time buyers skip it. They fall in love with the house, they make an offer, and then they find out that they don't qualify. I've seen it happen too many times, and every single time it was 100% preventable. I'm Eric Estevez, Eric the Lender, and I'm a licensed mortgage loan originator. And today I'm walking you through the pre-approval process step by step so you know exactly what to expect, what documents you need, and how to make sure your offer gets taken seriously in any market. Stay with me because by the end of this video, you'll be ready to walk into any home purchase with confidence. First, let's clear up some confusion because there are three different levels of a mortgage approval and they are not the same thing. Level 1, a pre-qualification. This is informal. You tell a lender your income, your debts, your credit score. They give you a ballpark number. No credit pull, no document review. Honestly, a pre-qual letter isn't worth much in a competitive market. Any serious seller will see right through it. Level 2, a pre-approval. This is the real deal. The lender pulls your credit, they review your income documents, they verify your employment, and they issue you a real pre-approval letter with a specific loan amount. This is what you need before you start house hunting. And level 3, a full credit approval, also known as a TBD approval. Now, this is the most powerful of all three. Your entire file goes into underwriting before you even see a property. Everything is verified. The only thing missing is the specific house. If you can get a full credit approval, do it. Your offer becomes almost as strong as cash in the eyes of a seller. Okay, so let's talk documents. Here's exactly what you need to get pre-approved. Number 1, your last 2 years of W-2s if you're a W-2 employee. This is straightforward. 2 years of forms from every employer. Number 2, your last 30 days of pay stubs, your most recent, all pages. Number 3, your last 2 months of bank statements, all pages, even the blank ones. Lenders need to verify where your payment is coming from and that it's been in your account for at least 60 days. Number 4, your last 2 years of tax returns, especially important if you're self-employed and if you have rental income or you earn outside of a regular W-2. Number 5, your government issued ID, your driver's license, or your passport. Number 6, your social security number. The lender needs this to pull your credit. Now, depending on your situation, you may also need additional documents. Are you going through a divorce? Bring the divorce decree. Are you receiving a gift for the down payment? You'll need a gift letter. Do you own rental properties? Well, you have to bring the lease agreements and the Schedule E listed on your tax returns. Now, this is key. Be upfront with your lender from day one. Don't hide anything. Everything shows up in the file. And the lender who knows your full picture upfront can get you approved when someone who doesn't might not. So once you submit those documents, what is your lender actually looking at? Well, they're looking at 4 things. Number 1, your credit score. This is going to determine your interest rate and your loan options. Minimum for most conventional loans is a 620 credit score, and the minimum for an FHA loan is 580 with a 3.5% down. For the best rate, you need a 740 or higher. Now, here's something important. When I pull your credit, I can do a soft pull or a hard pull. A hard pull can actually affect your credit score slightly, but if you shop multiple lenders within a 45-day window and they do the same, all those mortgage pulls count as one inquiry. So don't be afraid to shop around. Number 2, your debt to income ratio. We call it DTI. This is the percentage of your gross monthly income that goes towards monthly debt payments. Your front end DTI is just your housing payment, but your back end DTI is the housing plus all monthly debts, your car payments, your student loans, credit cards, everything. Most conventional loans want a back end DTI under 45 to 50%. FHA can go up to 56.99% in many cases. Number three, employment history. Lenders want to see 2 years of consistent employment. Same field counts, and if you change companies, big gaps, frequent job changes, or recently going self employed can complicate things. Not impossible, but we need to plan for it. Number four, your down payment source. Where is your down payment coming from? It needs to be documented and traceable. Large deposits that appear out of nowhere, well, the underwriter will ask about every single one. Now, none of this is meant to scare you. It's just reality, and knowing it ahead of time puts you in control. Let's talk timing. How long does a pre-approval take? Well, with a good lender, sometimes the same day, sometimes even within a few hours. The key is having your documents ready. If you're walking organized, we can move fast. Now, how long is a pre-approval letter valid for? Typically about 90 days. After that, the lender needs to double check your documents, your pay stubs, your bank statements. After 120 days, we do need to re-pull your credit if we did a hard pull. Here's my advice. You can get pre-approved with a soft credit pull because there is no obligation, and we can guide you in case we need anything else from you, or if you still need a little bit more time to get ready. In many cases, we can actually run automated underwriting findings with a soft credit pull. But if you're within a few months of when you're actually ready to move, go ahead and get a full pre-approval or a TBD approval. Do not do anything that could change your financial picture while you are pre-approved, which brings me to the most important section of this entire video: your mortgage do's and don'ts. Once you're pre-approved, here are the rules to live by until closing. Do not open any new credit accounts. No new credit card, no new car loan, nothing. Every new account lowers your score and raises your debt to income. Do not make any large purchases. I don't care how good the sale is. Furniture, appliances, electronics. If it goes on credit, wait after closing. Do not change jobs. I know, sometimes timing is out of your control, but if you're considering a job change, call me before you accept any offer. Depending on the situation, it may or may not affect your loan. Do not make any large deposits without documentation. If grandma hands you $10,000 cash, I need to know about it before it hits your account. We'll document it properly with a gift letter. Do not co-sign on anything for anyone. Their debt becomes your debt in the eyes of an underwriter. And do respond to your lender's request immediately. Every day of delay is a day you risk losing your rate lock, your closing day, or the house itself. So here's where we are. Pre-approval is not just a letter, it's your proof of concept. It tells sellers you're serious, it tells realtors that you're ready, and it tells you exactly how much house you can afford, so you don't fall in love with something out of reach. Getting pre-approved costs you nothing. It takes 15 minutes to apply, and it could be the difference between getting the house and watching someone else move in. If you're ready to get started, the link to apply is in my bio. You can schedule a call with me or comment the word ready below, and I will reach out to you personally. No pressure, no sales pitch, just a real conversation about what you qualify for and what your path to homeownership looks like. And if this video helped you, hit that like button, subscribe to the channel, and share it with someone who's been thinking about buying but does not know where to start. Because that person exists in your life right now, and this video could change everything for them. I'm Eric Estevez, Eric the Lender. I'll see you in the next one.